Hey, it's Marcin. Today, we're going to clear up some confusion around choosing a legal structure for your photography business. We'll cover the differences between a DBA and an LLC, what each one means for your liability and taxes, and which might be the best fit for you as you get started. You'll find a comparison guide and a highlight of this episode in the description to help you decide which route to take. So let's break it down. Formalizing your photography business, and in terms of legal aspect, transform your passion into a legitimate business structure. All of this sounds so serious, and it's really just understanding. Once you understand what's going on with those structures, it's like, oh, now I get it. So like, one doesn't really protect me, one does protect me, in terms of liability. One is for tax advantages, but we're going to get into the details here. And you guys will understand exactly what I'm talking about. So why business structure matters for you when you're starting. Like, you really kind of have to understand where you are. Everybody will be in a different spot. Some folks will be in the stage where they literally are thinking about starting. They don't have any equipment. Maybe they have partial equipment. Maybe they have a camera with a lens, but they need more lenses. And do they need a legal structure from the very beginning? Not really. Does it hurt? Not really. So it's really a preference. You're not required to have immediately a business entity when you're simply shopping for your equipment. It only matters when the income is starting to come in. But again, at the same time, since you already have a capital, maybe you have opened a credit card and you're spending money on your equipment that you're going to use later. Remember, keep track of those receipts, because if you have the legal structure, you're going to use those receipts to then write it off. And you probably hear that word a lot, like write it off, but it's basically, when you get some money in, you can then deduct your expenses from the money that came in. So you're being taxed on less money versus the original amount that came in. So back to the slide here, consistent income changes everything. IRS attention increases with regular earnings. What do I really mean by that? There's this, I've heard a couple times. There's this common misconception that you don't really have to have any formal tracking in place or until a certain amount. Like I think last one I've heard, and I think it was from one of the students, where it's like, oh, I heard that anything under $500, like, you don't have to, like, that it would be nice if IRS didn't care, but they do, and you have to make sure that you're covered this way. So technically, yes, you're responsible for any money that comes in, right? For tracking the amounts, and they do expect you to do it. Now, does that mean you're going to be, if you did 3 family sessions and somebody, 3 families paid you, 150, 250, 350 a pop, does that mean you're automatically going to pop on the IRS radar? No. So, and again, this is not a guarantee. I'm not your legal, I'm not your attorney, I'm not your accountant. But this is essentially what it is. Like, for you to pop on a radar, the income would have to be substantial. It would have to be more than just a couple $100. So I think that's where that story originates, when people are like, hey, if it's this amount, can I still get away with it? And so again, when IRS is auditing, they pay. It's random, by the way, but they do pay attention to larger amounts than a couple $100. So, but the technical answer is you should be keeping track of everything that comes in. Legal protection becomes critical. So client disputes can threaten personal assets. We'll talk about it in a second when I dig into the different legal entities. Professional credibility matters. Clients expect legitimate business operations. It's true. And especially when you guys are growing, and depending on how fast you're growing, having the legal entity, having not just your name assigned to this business, but a true business name, and maybe some, formal business cards, some marketing materials, some legal documents, EIN number, which we're going to talk about in a second. People actually expect you to have something. I know in our case, when we got to the point where we were shooting events that exceeded like $4,000, $5,000, $6,000 for the package, client actually expected to write a check to a business instead of a person. So it's just a cleaner way of doing it. But if you're starting and you are not at that level, not a worry. We're going to talk about some options here for like what to do when you're starting out, what to do when you're sort of in the middle of the journey, what to do when you're sort of higher up. Maybe you're bringing substantial revenue and you're still operating as DBA or LLC, and like there's some serious tax benefits for you to be in S-Corp. We'll talk about it in here. Next thing, business structure options. So let's look at the, for the first one, I always mispronounce it, and I hope it's not true for you, but a lot of people do. Sole proprietorship. I think that's what it is. Proprietorship. I think that's what you call it. But nevertheless, this is where you're simply, before we dig into details, the sole proprietorship is the first one. The DBA is the next one. Then the next level, it's almost like starting at the bottom. Like step number one would be sole. Let's just, for the sake of this conversation, so like sole, and then or SB, maybe even better, SB, and then DBA, and then LLC, and then S-Corp, and those are the four main ones that we need to care about. There's other entities, but that's beyond the scope of this training and conversation. So I just want to talk about those four first. So the SB is basically the simplest start, and it's personal tax filling. This one is super easy. So there's really nothing you guys have to do other than you're basically, we'll use me as an example. Let's say Marcin opens up a photography business today. Somebody knocks on the door and wants me to do their senior portrait, family portrait. Maybe a professional knocks on the door, like a doctor or lawyer wants some professional pictures, and they want to pay me. What can I do? I can basically take the contract and sign it as Marcin Rafalowicz, and they can sign it from their end as my client. And there's no business name required, nothing. You don't have to make stuff up. You can just simply write a contract, sign it with your name, and take the money. Let's say we'll use a fixed amount. Let's say it's $1,000 for, just so we can understand what happens later with that money. But like they pay you $1,000, and that goes into your personal bank, regular checking account, and that's how it's handled. That's how taxes are handled. So at the end of the year, I believe there's Schedule C that you attach, and you basically on that Schedule C, if you go to your accountant, you say, hey, I'm making some money on the side. Here's the 5 people that pay me this year. And just the accountants, they know what they should be doing with this information. So you basically say, here's $1,000. If you had 5 clients, let's say it's $5,000 total that I've made from my business, and they put it on a schedule and they attach it to your taxes, and that's really it. You're not really protected legally. There's no entity, there's no business name. It's just Marcin doing business as Marcin, right? So pretty straightforward. For the next sort of recommended structure, DBA, brand name only, and business banking access. I'm probably digging into details later, so sorry if I overstep or jump around between slides. But DBA is brand name only. So in this case, I basically register my operations as like this as a business. So you basically register the name, and at that point you can go to the bank and you can open up a separate account. And this way you can separate your personal finances from your business finances. And it's awesome because if in case you ever got audited, like you never want to go back, even for your own personal tracking purposes, you don't want to be going through your account, your statement, your monthly thing every week or every month or every day, and search through your personal stuff and the family expenses and looking for business expenses. So just a very important thing. It's like that allows you to just operate then as let's call it Marcin's Photography, and you have a business account. It's still under your social security number. In most cases, you can have an EIN. We'll talk about it in a second, but at this point, I would not recommend getting an EIN. You can still operate with your social security number. It's just you're operating as a business, quote unquote, with a name, and then your finances are separated. LLC, this is when we're tapping now into protection for liability. That's where the name comes from, limited liability company. And what that means, it gives you a legal protection because you're not, if in case something happened and somebody went after you and wanted to sue you, they can go with an LLC. Once you have that formed, they can go after your personal assets, whether it's cars, accounts, saving accounts, 401k accounts. If you own multiple houses or boats, I hope you do. They can go after this stuff. They basically can only go after, seems like Bruno agrees because he's barking over there, but they can only go after your business assets. So if you have your separate bank account for the business, they can go after that. If you have equipment registered under the business, they can go after that. So it's only anything that business owns, quote unquote, they can go after those assets, but anything personal is separated. For that very reason, a lot of people, including myself, I like to, even when I start and I'm not really sure what I'm doing yet, I register an LLC. Yes, it does cost money. We'll talk about details later, but that protection is super valuable because nobody can touch anything that's personal or anything that belongs to the family. They can only go after the business, and it has a nice professional structure. So whenever you're registering your account with the bank, now you're under. Not you personally with your social security number. There's actually a number that federal government assigns to your business, to your operations, and you now act as a company. And you usually have a title. We'll talk about it in a second. But that's what it is. And then S-Corp, this is really tax efficiency. We'll talk about details in a little bit because you guys, I want to show you a visual so that you understand what's going on. But it's usually for higher income levels. Think about I want to say 60, but I'm actually tempted to say 80,000 and up. So if you're crossing 100,000 with the income, then you're tapping into S-Corp and tax benefits. And that's when you should be kind of considering switching over. Again, it costs even more than an LLC, but then you're already making money. So it really doesn't matter. And then you can take advantage of doing taxes differently. So that's really it. Let's look at the next slide and see what we have there. Sole proprietorship. I think I got it right. By the time we're done here, I'm hoping to get it right. But this is, like I said, I'm just going to kind of recap some things, but getting started, no paperwork required. You're just going out there. You're starting to provide your services and use your social security number as an indicator for tax purposes. Same personal bank account. Tax implications report on personal Schedule C. That's what I mentioned before. And self-employment tax applies. So whatever bracket you're in, that will apply to that income. If you make 1,000 or 5,000, your personal taxes will be calculated the same way as whatever your employer does. So that's what happens, and it's being done with at the end of the year, same way as you do your taxes, whoever you do your taxes with. And then risk factors, no asset protection, like I said, and personal liability exposure. Shit happens. You're responsible. You're running a risk of somebody going after you. So as much as it's there's really nothing I have to do. Yes, but make sure that when you're, maybe if you're doing 4 or 5 sessions, maybe when, you're just doing, I just wanted to say portraits for your friends and they pay you $100 each or whatever. Maybe you don't have to worry about the protection. Just go out there and you shoot some photos in the park and no big deal. But the second you start bringing your equipment to locations and there's a risk of something, I don't know, electrical, I don't know, setting somebody on fire, you want to make sure that you're protected. And that's really it for this one, for this entity. And the next one, let's look at DBA. So this is branding without protection. Again, you now exist as a business because you have a name. And 3 steps here: file DBA name. So you register with the county. Now they see you as a business. Taxes, again, they can go on under your personal your social security number. Open business account. Separate your finances from your personal stuff. Keep business as business. It's super easy, like I said, for audit purposes, and just tracking in general. So that's nice because you can, whenever you provide documents, even now or later on, to your accountant, like you can just go to your account and print it instead of providing 600 pages of your personal transactions to your accountant. Like, that's crazy. Plus, they're going to charge you more. So if you start from the get-go, sort of in the right format, life gets easier later. Plus, when you decide to go to LLC, like it's just better to do it this way. So I would say minimum form a DBA, like register a DBA and do it this way with separate account. Same tax treatment. So like I said, still reporting stuff under you, and that's it for DBA. For LLC, professional protection, now things get serious. Like, you're really, there's more clients, there's more money coming in, and at this point you can do it. People think that, like, LLC, it's like, it sounds so formal. They think that they actually have to do a lot. Like, there's a lot of paperwork, or maybe they have to hire a lawyer. Good news is you don't. It's super simple. You can do it either by yourself, or there are services online that I'm gonna share with you guys where you can go and they'll take care of stuff for you for a fee, of course, but it's not super expensive. And then asset protection, personal. Let's talk about details. Personal assets remain separate. So no worries about things you already own. Business structure, official entity formation. Now you're an LLC, you're formal business. Everything, your paperwork, your marketing materials, everything reflects that name, and now you're a true business. And the nice thing about LLC is that if it's not just under your name, because what if you have a partner? What if your wife, like in my case, works with you? What if you have helpers? What if you have people that are, maybe you have assistants, maybe you have virtual assistants, that's a separate training session for you guys. But you can then formally keep those employees. If you're paying somebody for their services, you can have them legally, just kind of part of the LLC. And that goes either to, like, people that own the LLC, because there could be multiple people owning an LLC. If it's a larger business, you can have directors, you can have multiple members, and they all own part of the business. So you can actually have the business and say, I own 50%. If maybe you have a partner, maybe there's a second photographer. I know friends from my past in Connecticut, like there were a couple companies where it was just two friends joining forces, and you can say, okay, we're going to form an LLC. This is now a legal entity, but there's like 2 or 3 people standing behind it, right? Each owning 33% or whatever. So that's why you want to have this in place. Tax flexibility, choose taxation method. This is a question for your accountant, and all it means is with LLC you have more flexibility in terms of how you're going to tax it, when you are going to be taxed, whether it's like a quarterly thing, end of the year thing. You're depending on how much volume, how many people knock on your door asking for your services. You can then talk to your accountant and say, hey, listen, what makes sense? Maybe I don't want to wait a whole year to like do my taxes. Maybe I want to do them quarterly. Maybe you want to do something monthly. So there's some benefits, and it's just what do I want to call it? It's just a lot of us get sort of I think most of us get a little paranoid when we deal with taxes, and it just offers you more options. It's not like a standard end of the year you do your taxes. With LLC, it's a little different. So that's just what I wanted to mention. And then EIN number. When you're forming an LLC, one of the requirements is to get your employee identification number, which for short is EIN, and it's a federal identification number. It's like your Social Security, but for the business. So when I formed, I think I can flash here. I don't know if you guys are going to see it. If it's not going to be overexposed, maybe. But it's just like a stack of papers. Top of this paper says EIN, but it's all the documentation came in a nice FedEx envelope when I formed my LLC. Hey guys, pausing here for a quick second. If you're curious about where you stand on your photography journey in this process of building this business, we've created a quick assessment to help you identify your strengths and areas for growth. Just click on the link in the description or follow the link on the screen. Take the assessment and get your personalized insights to help you move forward. Let's go back to the video. And the EIN is basically, like I said, social security number for the business. And that's how IRS recognizes you. They don't care about your name. They care about your number. And that's your identifier. So that's LLC. Again, you're protected in case stuff happens. Again, I can't stress it enough. They can only go after business assets and not your personal assets. So that's that. The one question that I like get from time to time, folks are asking. So when is this switch from like DBA to LLC? I did put some numbers here, but I will contradict myself. But let me go through it. So I said 10K minimum revenue, consistent annual income threshold. So like money is coming in and it's on a regular basis, whether it's 5,000 or 10,000. I wrote 10K and I'm like, I need to change it because I like to get it going from the very beginning. Unless you're really like testing waters, dipping your toes and like, I'm not sure. I just want to like try 3 sessions and see if I like this photography thing. Like in my case, I knew that that's what I'm was going to do over the next couple of years. Like that's my business. So I'm going to form it and not run into any risks. So this 10K, treat it kind of loosely. And then 40K, sweet spot, strong business case for LLC. Like I said, those are high numbers. But anything, I think anything over 5K, like you guys should seriously consider that. Because you're running with 5K, you're already running events, or you have so many family shoots that like you want to kind of make sure that you're protected. 10K is definitely like you definitely need it at that point. And I said 3+ client volume. It's 3+, multiple bookings monthly. So this is a monthly number. And like I said, to get to 5K with like family sessions or even personal and professional portraits, this is where you need to be. So that's when you should be considering an LLC. And then next slide, we have S-Corp election tax strategy. So with S-Corp, you let's look at this slide. Reasonable salary, pay yourself as an employee, distribution payments, lower tax rate on profits, administrative requirements, payroll and corporate formalities. What does it all mean? Whenever I hear language like this, I almost like tune out. So let me just dissect it for you guys. When people talk about S corporation, you're really taking advantage of the structure in terms of your taxes. So let's use an example so that you can better understand what I'm talking about. Let's pretend you have S-Corp is, by the way, recommended for higher levels of income, right? So you're already at 60, 80, 100, 120,000 coming in from your photography business. And everything that comes in when we compare that to an LLC or any other business structure we have discussed so far, everything is your personal income. So everything gets taxed the same way. So with LLC, even with LLC, you have the protection, you have the legal entity. It comes in and it's like, that's my personal income. In my case, if it's 100% LLC, I own the whole thing. It's treated as my personal income. Same thing. So whatever tax bracket I'm in, this is then being treated kind of, the same way. And there's actually additional tax on top of it because now you own this business. So there's you actually pay more than like a standard employee. Um, but the S corp, what it offers you, the main advantage is the split. And what I mean by the split is if 100, let's say 100, just for ease, just so it's easier calculation, 100,000 comes in, you can say I only take 50% of the profits from the company. So let's say you generated 100,000 or 80,000, you say I'm only keeping 40 as my personal income, at which point that's being taxed only as your personal income. And then if it's 100,000, 60,000 goes back into the business. It's not taxed. So that's phenomenal because money in your pocket, you can build a business. That's being treated as what they call a distribution, meaning like distribution inside the business. And that gets reinvested into the business. And that's just what it is. And what you do with the money, it's kind of what you do with the money. But the thing is, for tax purposes, in terms of the legal structure, your accountant will advise you, and he'll probably say something like you have to pay yourself, because people would say, hey, I have 100,000 coming in, I pay myself only 8K, and maybe that's even true. But the thing is, when you form, because a lot of people, just to dissect through this, a lot of people can. What if you're 18, starting this photography business, and you live with your mom, and you want to reinvest everything into the business, but you have an S corp? IRS would not allow you to claim that you're only making $8,000 out of it. You can probably prove the case. I wouldn't take a risk, but the thing is, accountants usually use the term of a reasonable salary, and this reasonable salary is a gray area because it's like, who knows what reasonable is. But in case of 100K coming in, they would probably say reasonable salary is like 40,000, and then you can say 60 goes towards the business. That's why I was splitting it this way. And then 60 gets taxed. IRS wants to tax you because they do want your money, rightfully so. We live in an awesome country, so the thing is, this is how you would handle your taxes. But you can see how once you get to 60,000, 80,000, if half of this money is not taxable, you're saving thousands and thousands of dollars. The disadvantage with the S corp is that there's some funky requirements. You must do payroll, so you must be doing payroll. You must be doing, even if it's just yourself, you must be doing bookkeeping like on a regular basis with books and everything. And then you must be doing something like board meetings, and again, sounds so like something that you can put on a pedestal, board meetings, but it's literally like if me and my wife work in a business and we have our kid helping us out with equipment or maybe editing or whatever, like 3 of us can go on a trip, and I can write it off as a trip for the business because all the members are getting together to discuss something. So please don't think it's anything kind of over your head. It's those are the things. And for the payroll and bookkeeping, I actually talk about it in like formal training when I work with individuals. But the thing is, there's ways that you can, because the conventional way of thinking about it is like, oh, bookkeeping, so I have to hire an accountant, like physically leave the house, go somewhere and whatever. But there are services, there are ways to set it up so that it's to make your life easier, where everything is just kind of done online. You pay some sort of a monthly fee. You have a system where you're submitting all your like receipts or whatever, and then your online, let's call it, accountant handles everything, all the bookkeeping. So it's like a worry-free environment. You guys are not dealing with books, calculations, or nothing. Think of it as like as simple as having a shoebox, and you just throw stuff in there, and it's just being taken care of. And let's say you pay $50-$60 a month, depending on, because they usually charge depending on your income, which is nice. So you're not paying arm and a leg if you only have few clients, but then you pay more when you have more clients, which makes sense because it's more work, but you're making more, so you get the point. And that's really the advantage of S corp, those taxes. And the next slide, which I need to switch to here, is the kind of what we did with LLC, S corp, election, tax strategy. That's the old slide. We need a new slide. S-Corp income threshold. So like, when do we consider, I said 50K, I'm thinking more like 60K is when you should be considering, it actually says 75. So 50K revenue, consider S-Corp election. Like that's when you should, this is when the flag should go up and like, I maybe should be switching for tax benefits, maybe do 25 as an income and 25 not taxable, like non-taxable. So that's the sort of like a first milestone. And then 75K revenue, strong tax savings potential. You're making serious money now. You almost like should be switching. Again, should, I hate that word, but you know what I mean. And 100K revenue, significant like administrative benefits because you get write-offs, all kind of stuff. Like when you're making 100K, you can afford to hire some folks to help you along. So that's that. And yeah, and you can hire help. So at that point, it doesn't matter. Like you're making enough to be sharing some love with others. You can hire people to help you along with the journey. So that's not a problem. Before I talk about like common mistakes and misunderstandings, I remember whenever I was like watching trainings or advice from somebody online, I would be like, okay, but like, where should I start? Because I've covered 4, and it's like, which one is good? And it's the same like people asking me for cameras or lenses, but it's the same thing. My advice is, no matter kind of where you are, I think LLC is almost a must. The setup costs. Not sure if I have a slide for that, but the setup costs, the DBA is like a $50, $100, maybe $150. The LLC will probably run you between $300 to $500, depending on the state, because it's different fees and stuff. So, so between like $300 to $500, and then S-Corp probably $800 to $1,000. Again, you're making more money, so you don't really care. I know a lot of times when we're judging from where we stand today. So I wouldn't worry about it necessarily, because it's like when you're at the LLC level, like you already have income. When you have S-Corp, same deal. But I would recommend LLC, not an S-Corp. Like that's when you're already making serious dough. But the LLC, you should be like doing everything to get to that point, because I want you to be protected and not worry about stuff potentially happening and you being liable. So that's it for the entities. And now common mistakes and misunderstandings. Those are just like random, but for some reason I don't know where this information is coming from, but like very often I hear those things. So let me one more time. I'll just share the slides here. And here's what I have: mixed accounts, personal and business funds, poor record keeping, missing receipts and expenses, tax misunderstandings. LLC doesn't eliminate taxes, as many of people believe. I'm not sure why, and then quarterly neglect, skipping estimated payments. So let's unpack those. The first one was mixed accounts, personal and business funds combined. You guys already know, should be separate. For a lot of reasons, it should be separate. A lot of people, it's like, no, I'm just gonna use one single, and then they run into all sorts of stuff. And I had one case where somebody, not a friend of mine, but a acquaintance, a photographer I knew, was audited, and once IRS started plowing through his personal expenses, they can pull stuff that's not really related to business. And you may be paying penalties and fees because there's something on the account that's not even business related. So that's another reason to have a separate legal business account. Poor record keeping, missing receipts and expenses. We're just not in the habit of, like, I'm super bad with that. In terms of like keeping records, and like personally, whenever my wife is asking me like, oh, make sure you grab a receipt, like I almost never do, that I pay the consequences. But missing receipts and expenses, you guys will just have to get in the habit of, like, whenever you're spending on business or anything related to business, like that board meeting trip, you have to keep the records because you're going to need them later. Tax misunderstandings, LLC doesn't eliminate taxes. Nothing eliminates taxes. I think death eliminates taxes, right? So that's the only thing, that's the only exception. And quarterly neglect, skipping estimated payments. It's a, not sure if you remember, but like when I mentioned LLC, I said there's some tax benefits or flexibility. And it's, you can make you should be making your quarterly payments. Those are estimated, and it's pretty cool because you don't have to worry about waiting like a large sum at the end. And with LLC, rightfully so, it actually makes sense because you're already making some serious money. Like you don't want to be end of the year to basically skip your quarterly, not only pay the penalties for not doing this quarterly, but then you find out you have a huge tax bill that you're responsible for. So quarterly neglect, just make sure you're staying on top of it. And the nice thing really is that when you register your LLC, most of those services send you reminders. And not only that, because at the level of LLC, you're usually working with an accountant, like usually maybe not in person, but online. They will be reminding you, and they will be, ringing the bell to just let you know that like you have some tax obligations that you have to take care of. And as you do it every quarter, another year, there's nothing to worry about. It's just another quarter you have to cover, and that's really nice. So so those are the critical business mistakes that I heard about recently. Let's see if we have one more for you guys here. Start smart, scale strategically. That's actually the last slide. So just sort of to highlight, it's like, don't worry about like S-Corps or LLCs maybe day one. Foundation first, that's the bottom of this chart here. Just begin with, begin where you are. You can just do business as you, and you don't have to worry about the sort of legal aspect of it. You can write a contract, accept money, and just run it through your account. Business banking, like I said, that's your next step. Separate it as soon as possible, as soon as you can. And then with the business account also, when you have that account, you're also starting to run like credit history for your business, because eventually you probably will be looking into opening like a business credit card to help you grow, to help you scale. And that also helps with like insurance, because on top of the LLC that protects you liability wise, some venues, like we're talking higher level, we're talking like level 8, level 9, level 10, and beyond. Some venues may be asking for insurance, like, are you an insured vendor? So that helps with that. And then professional growth, scale, structure with income. When you get bigger, when the income is substantial, maybe you're working with different individuals, you can start considering like S-Corp and all those other entities. All right, guys, thank you so much for watching. I love sharing this information with you for free. And the best way you can support me is by subscribing to the channel, obviously, or liking the video or leaving a comment below. Your support means the world to me. And if you have enjoyed the content, make sure to check out the next video suggested on the screen. See you there.